What's up, guys? It's Nick Cypher, the flopping groper, and I'm here with a quick lesson for you guys on the Vwap strategy in regards to two different markets. We've got volatile markets and we've got less volatile markets. And so even with the same asset, every day is a different opportunity in a different environment. And knowing how to tackle these two environments is very important, and I want to go over that in this quick video. So in a volatile market, which is where there's a lot of movement and a trending market, basically, we'll pick a day such as this one here. This was our trading period on the 22nd. We were running away from the VWAP, and so look at these quick moves up and down. And like, let's say you shorted here. If you held this short, it would have come up on you substantially, and you would have been sitting in this position twice as long, 3 times as long, to get the same payoff as if you would have just taken profit right down here and then looked to re-short closer to the VWAP line. And so the lesson with volatile price action is we want to have quick, high frequency moves. We want to have tight stop losses, because like you would want your stop loss basically at the VWAP on a scalp like this, because in a volatile market, if this thing is going to rip on you, it's probably going to trump it out and create that higher high that stops out your wide stop loss that you set. So on a volatile market, keep the stop losses tight. Stick to that original idea, maybe like that bearish trigger wave. You think that that's a very good indication that this is going to keep going down, because we're under VWAP and there's a lot of confluence on other time frames. So stick to your guns and keep that tight stop loss. Get out quickly and look for either the reversal trade, or what I would rather do, and what I would rather you do, is wait on the sidelines for the re-short, since we're still under the VWAP. Basically, like, keep trading with the grain. Don't try to be contrarian. And so that is how you would handle a volatile market. Whereas a less volatile market, the VWAP is actually a stable guide for the price action. You can see we got this kind of, the price is basically just oscillating around the VWAP line. And so it becomes less about finding those whale splashes into the long setups, and then like you get the continuation. Like, that would, in a volatile market, that would be amazing. But in a less volatile market, we have to consider getting more out of these swings and being more precise, but also having wider stop losses. So we want to look for signals like below or over the VWAP that are signs of tiring, such as like bearish divergences, green dots, and like VWAP, the yellow oscillator crossing over zero. Any little indication that we're going to go back to the VWAP in that direction is a good reason to long. And you want to get the best possible entry possible. Like, try to get like a limit order in, and make these trades like very precise, and just put a little more attention to them. And also set your stop loss wide, like set your stop loss far away, so that this not bad, but this less volatile price action doesn't get you at all. And maybe if you need to stay in a little bit, you can, such as like, see how this came down. There was a potential that this came down a little bit lower on you, and that would have probably stopped you out if your stop loss was very tight. So having a loose stop loss like down here, and just allowing yourself to not be liquidated or exposed to any crazy loss. And you can eke out a living by getting the move, like longing from the bottom, like below VWAP, and then selling or shorting at the top, and playing it like that. But you always got to be mindful in a less volatile market of volume picking up. You want to look at those volume readings, because there could be something on the horizon, especially, well, in either a trumpet pattern or a consolidation pattern. There's possibility for volatility, because a consolidation or like a pennant is going to reduce in volatility until the point of a breakout. And then a trumpet pattern is just going to be giving you crazy moves in either direction, just whipsawing. So the low volatility won't last forever, but if you can isolate a low volatility market, that's how you would trade it, is like you're longing below VWAP, shorting from above VWAP. And you have looser stop losses so that the ebbing and flowing of the price, the boring price action doesn't like stop you out. But look, we have this trumpet pattern here. It is possible that we have come up over the VWAP. It's possible that we gain some traction and hit the top of that trumpet. But if we reject from this middle area, that would be a bearish sign. But yeah, so you also want to have patience with these low volatility things. Like, it might take longer for the move to play out. Like if you look down here, this scalp took 11 bars on the 10-minute, whereas this scalp took 38 bars. And so anticipate low volatility days, moves on those days, to take like 4 times longer than moves on a volatile day. And you guys know me, you know which of these markets I prefer to trade. My edge is a trending market. And today in the VIP, I talked about some conflicting signals, and I told them it's not a day that I would personally trade, you know, and that's an indication in and of itself. So recognizing what your edge is, like, are you one of these guys that can sit here and watch this price oscillate around VWAP and get the most out of that? And do you like to kind of play it safe and avoid the whipsawing and the wicking and the craziness? Or do you thrive in that? And do you thrive in like sniping, you know, like the trading sniping that goes on during trending markets? Personally, I like that high frequency style. I like the tight stop losses and the excitement of trading in a trending market, the confidence I get from getting those big rips. But I know that there's a place for this low volatility trading as well. And so just because my edge is like trending stuff, I need to cover this less volatility style of trading with VWAP as well, because this might be your edge. So remember, like, your strategy isn't just the indicators you're using or the time frames, it's the type of market that's going on. And there might be days or even weeks where like your criteria are not met.